All right, we are live. Greetings, fellow traders. Let me get this tweeted out so everybody can get joined in. Awesome, awesome, awesome. All right, we are live. Well, I hope everybody had a great weekend. I hope everybody's doing well and healthy and enjoyed the weekend, got some rest, and spent some time with family and friends, and are get rested up for a fresh week this week. Wow, what a week! And I thought, what better a topic to talk about this week than volatility? So we are definitely in some volatile markets here. So I think it's going to be a good one this week. So that being said, before we get started, everything we're going to talk about today is for educational purposes only, not investment advice. So please take a moment to review this disclaimer. Awesome, awesome, awesome. All right, well, let's take a look before we get started. Let's take a look and see where we left off on the market. So you can see with the SPX, we are starting a brand new month. Today is the first day of March 2020, and tomorrow begins the first trading day of March 2020. Obviously, the futures are starting tonight. We'll take a look at those in a little bit and see how we're looking there. But let's take a look and see what happened. So last month, wow, what a nasty candle. We pushed all the way up to all-time highs, and then a huge red candle here on the monthly chart. So what was really interesting is that the prior month gave us a shooting star candle, right? A red shooting star at the upper Bollinger Band. This is very rare on the monthly chart, right? So let's take a look and go back to the prior time. We've talked about this before. Prior times where we got a shooting star, very rare stuff. You got this one right here that had a follow through to the downside, right? Let's see. I mean, you really just don't see these very much, right? This one right here, right at the upper Bollinger Band, upper shadow, right? And then that follow through, the very, very big follow through the downside. Look what it did. Came back down to the 20 moving average on the Bollinger Bands, worked its way up, walked up the bands, came back down again, etc., etc., etc. So we did get a shooting star here in January, right? And then, but we continued to push our way up until we broke those lows, right? And that actually happened with a gap down because coronavirus type stuff and everything like that, right? So let's take a look and see how the weekly chart looked last week. We're starting a brand new week this week. Wow, nasty candle, right? That's like pretty much one of the worst that I've ever seen. So, we had the prior week, we had a red candle with an upper shadow where we hit the all-time highs, and then that was that Friday, right? This is one of those candles we talked about. This is one of those ones where it's like, okay, if you're not going to short, right, definitely keep an eye out for longs, right? Because anytime you get a red candle on the weekly chart, you have to be careful with your longs. You can always get back in later, right? So that's the one thing. Or if you have that short position, you obviously had an incredible week last week to the downside if you were short. So one of the key levels too is the 30 weekly MA, and we did close below the 30 weekly MA. We did leave a big lower shadow, and what was really interesting about this is that it left it right at the October lows. So we found a little bit of support here. So let's see if that continues to hold. Below that, right, we have this congestion zone, the lows right there, that 28.25, and then certainly below there, 27.28. So these are some key levels we need to look at if this volatility continues and we see ourselves pushed to the downside. Let's take a look at the daily chart and see where we left off. So actually a pretty nice candle. We showed this earlier on Twitter to show where the on the futures chart to see where what we did, right? We finished with a hammer on Friday, so we need to see if we can break above that hammer, fill this gap, and really, depending on how we close, could imply how bullish we get. Now, we may come back. We have the 200-day moving average right here. We may come to that, find some resistance, right, and work its way back down. But if we get into 50% of this range, we'll have a Morningstar reversal, right? And a Morningstar reversal, especially with the way that the plunge protection team works, could be a very, very bullish sign. And so if you remember back in the December timeframe of 2018, right before the Christmas reversal, look what we had here. We had a Morningstar reversal. Now remember, the Morningstar reversal, of course, is a 3-candle setup, right? We had a bearish candle right here. We gapped down below it, real body that stayed below this real body here, and then the next candle closed above 50% of the range of the first body, and then naturally we worked our way up all the way to all-time highs eventually. So it was a pretty incredible reversal point. So now we'll see how well the market handles these levels going into tomorrow. So real quick look at the price action again on Friday. Let's take a look at the 15-minute chart and see how the SPX behaved. So it was actually kind of a choppy day, right? So we stayed up and down and within the 15-orb range, right? But it finished really, really strong into the close. In fact, it was pretty incredible. The 295 calls on the SPY went from like 4 cents to $4 in just like the last 5 minutes of the day and a little bit into the close. So, or just about $4. So pretty amazing close. They definitely were trying to buy it up into the close, and then we gapped down this morning. Let's take a look again at these are the levels that we provided to our members before each market open. open. So let's take a look at the February 28th levels, and you can see how all these levels were tested right back on Friday. So level to level to level to level. So a lot of back and forth, right? So it was some choppiness, but big range, right? Still like a big range on Friday. So definitely something to note, especially during the day. So pretty amazing stuff. Let's take a look. Let's go back to the 15-minute chart here and take a look at the S&P futures. So actually, a very interesting one to look at here is the daily chart before we look at tonight's. Okay, so let's go to the candles right here. So we can see here, wow, inside days so far forming on the S&P futures. Big range so far, over 81 points from the lows today. So we gapped down, and now we are green. We're up 20 points right now. So one thing we know is that with the volatility so high, is we've been seeing a lot of fast, big moves, fast, big candles, and it's been very interesting to say the least, and also challenging. So definitely something to keep an eye on. See where these futures end up in the morning. Of course, we could be down 50 points before you know it. So just something to keep in mind. So you still have to have open solid tactics and strategies to handle for intraday price action. Okay, so that being said, let's take a look. And today we're going to be talking about, this week we're going to be talking about day trading volatility. And today we're going to talk about what volatility is. So there's a couple different definitions for volatility that are out there. And so the primary one is volatility, and the other one that we look at is implied volatility. And sometimes you hear folks talk about volatility in another way. So one of the ways to look at volatility is just simply volatility, right? So how much price moves, right, historically over a period of time. That is the definition of historical volatility. So when we talk about volatility, sometimes we talk about how volatile the stock is, how much it moves, right? So we want to know, if something is really volatile, it's really moving, right? It's going up and down and up and down in big ranges, right? So we see that a lot too, and that is essentially the definition of historical volatility, which is really, I think the true definition is the standard deviation of volatility over a historical time period. So that being said, we also have another type of volatility called implied volatility, and implied volatility affects the options, right? So as option traders and option day traders, that's one of the things that we look at often, right? So we like to, it's an important tool that we use to determine whether it makes sense to trade. So before we get more into implied volatility, there's also the volatility of the market itself, right? Which is the VIX. Right, so the VIX is the CBOE, right, the Chicago Board of Options Exchange Market Volatility Index, and what this does is it measures just that. It measures the volatility of the market, which means the how much we can move, how risky it is, and and how big the swing moves can be over a period of time. So if we go to the VIX right here, you can see that generally the volatility stays low in an uptrending market. But when things start to flush to the downside in a very fast way, the volatility really picks up. It's a great way to look at the inverse of the market. So we always like to look at this as part of our internals. So you could see this last week, we had a huge spike in volatility because we had that huge down move, right, in the market. So and look at the key levels that we got to this week, right? So we got almost to the January highs. So this is when volatility really started to kick in, right? In this early 2018, early February 2018, we got that huge spike here on February 5th, 2018. So amazing 2 years ago, if you can believe it already. So up to about 50, right? And we got really, really close to that here. So one of the interesting things is we had this geometric trend line to the downside, right? We hit this, and it served as really, really good resistance recently until here, right? So we started to get above it. We tagged it right here, worked our way back down. We tagged it right here with an upper shadow, and we couldn't quite get below it the next day. So usually it bounces off of it pretty quickly, but we gave us an inside day right here. Then we chopped around for a little bit, and then boom, exploded out of it. So we got really, really tight here at the low end of this geometric channel. You can see here we got tight with the cloud, and then we had this big gap up and this huge spike in volatility, which corresponded with the down trend line that we talked about this weekend on Twitter with the market itself when the big down move started with the upward trend line breakdown, the trend box breakdown, and then ultimately the move down. So VIX is a way to measure volatility. So now, the other tool that is really helpful is implied volatility, right? So implied volatility is one of the components of option pricing. So let's take a look. Let's just define option value real quick, as we've done before, but just as a reminder. So option value, so the price of your option is equal to your intrinsic value plus your extrinsic value, right? Okay, so that's what we have. So your option value is your intrinsic value plus your extrinsic value. Your intrinsic value is simple, right? It's just the price of the stock, the absolute value, the price of the stock minus the strike price of the stock. So if we go here, if we take a real quick look at the at the options, right? And we just kind of take a look here, even the VIX, right? We can take a look at what the strike price is. So here we would look at, so we left off with the VIX at $40.11, right? So the difference, so at the $40 strike, we would expect an 11-cent value of the stock, right? Because the difference of the strikes between 40 and $40.11 would be, well, there's a little bit of spread here, right? We know that supply and demand is still involved. It's about $3. So what is that $3? Where does that come from? It's an arbitrary number. Well, some of it does come from supply and demand, but the rest of it comes from the extrinsic value of the options, right? So the extrinsic value is really the key component right here. So we know what the intrinsic value is. So where does all that other stuff come from? Where does the rest of the premium come from when we're trading options? So the rest of the premium comes from your extrinsic value, right? And the extrinsic value is equal to your time decay, okay, plus your IV, your implied volatility, okay? So that is the key component right there. So your extrinsic value is your time decay plus your implied volatility. So we know with options, when we trade weekly options, or if we trade monthly options, the more time you have on your options, the more expensive it's going to be. So you can see right here, these are the March 4ths. On the VIX, for instance. So we have until the expiration, we have until Wednesday until these expire. So there's 3 days of theta calculated in here. Okay, so you had 11 cents. So you've got some theta in here, right? So that is a logarithmic scale. So there's a big amount of theta that's in there. The rest of it, right? The rest of this, the rest, that was the value right there. So you have your intrinsic value plus your theta. The rest of it is your implied volatility. So the implied volatility is a measure of so just the implied volatility side. It's a calculated level based on what market makers and calculations of the feel like that the price can move in any amount of time. So you can see as the implied volatility goes up, your premium prices go up in your options. So that's why you see stocks like anything really. I mean, we've seen Netflix at incredibly high levels, even though it's been working its way up. NVIDIA at incredibly high levels. So let's actually just take a look here, like for instance at NVIDIA. Okay. So if we go here for NVIDIA, here's the March 6th. These are the weekly options. Look at this, guys. We've already had earnings on this one. So NVIDIA is about, and guys, as a general rule of thumb, one of the things we look at for option, I like to look for option pricing. I like to take about 1% of the price of the stock to give you kind of a rule of thumb of what the price of the option should be. So at a $272, say a $300 stock, I would want my options to be priced somewhere, my at the money options to be priced somewhere between $3 and $4, right? So right now NVIDIA is trading at $12. Well, it's slated to open somewhere around $12, right? So that means, right? So even here at 270, we close at 270 and 7 cents. So you have 7 cents of intrinsic value in these options, right? But you have $14 of premium. So we have 1 week of theta left, the time decay, but the rest of that is going to be your implied volatility. And look here, so Thinkorswim, but whatever your broker is, should give you a good value of it right here. We're looking at about 115% or a plus or minus 30 range of the stock. So what it's doing is it's incorporating the calls plus the puts, so basically your straddle value for the probable move of it, and that implied volatility of 115% is cooked in to the premium of your option. So it's very, very expensive right now because the market is essentially in turmoil, right? Because of the down move, and those big down moves cause an increase in the volatility of the stock. So it's very, very tricky, right? And we're going to talk more about this week about how to trade that this week and how to take advantage of it. We're not going to get into too many exotic things like selling premium, which is a great strategy if you have a margin account, but we're going to assume a cash account right now and just trading straight options, right? Single options, right? So that's one of the things to look at and consider there. So that being said, let's take a look at one more thing to look and to track that implied volatility. So this is very, very important to be able to do. And there's a great tool that's in Thinkorswim called Implied Volatility, right? So you go to studies, you go to your edit studies, and I know it's hard to see right here because my broadcaster doesn't show the pop-ups, but just look for a tool called just type in IMP vol, okay? And then it'll pull up your implied volatility, and that gives you a lower level chart right here to show what the implied volatility levels are. So the higher the implied volatilities are, right, the higher the premiums are going to be, and that happens a lot primarily during down moves. Sometimes they come in up moves if there's some crazy. You can see we had a huge day yesterday, and implied volatility actually went up on Friday with a big move up in NVIDIA, which, by the way, held its cloud and some key levels right here, a prior inside day level and a bounce off the cloud. So it had a real nice move there. It's currently below its ADMA. So this being able to trace this chart, it's a good one to have, at least to look at every now and again to see what's going on with the charts, to see how high these implied volatilities are. And so this is a great way to tell why the option premiums are really high. And one of the things you do see is the vol crush, right? The volatility crush, which comes after earnings, right? So before earnings, there's a lot of volatility in there. Why is that? Because there's a high expected move, right? Remember, volatility itself is the anticipated, the standard deviation or the expected move of a stock over a period of time. And so before earnings, it's traditional for there to be big moves. And so you see the IV start to get up close to earnings. That's why before all this crazy volatility came in, it was often a great way to get an earnings run with options. So if you're running up in earnings, now we did get a good one with NVIDIA here, but not only do you get the move of the price itself, your intrinsic value goes up, right? But you also get that implied volatility before earnings. And then after earnings, you get your move and you get what's called the vol crush. So you can see here, the volatility was creeping up right before earnings. And then after earnings, it got crushed, right? Your volatility came back down. That's right. If you play lottos into earnings, you have to be really right on it. Otherwise, you get crushed on your premium, right? So say you don't move up. Let's say the applied volatility is $10 or the expected move is $10 and you go up 20, you'd still be okay because you're well within a good intrinsic value. But if you are within that 10-point range, it's going to get crushed because the premium is going to drop because the implied volatility drops. So that's just a good note there to remember. So right now, volatility is super high in the market because of the recent move down, and this is a great way to tell how high that volatility is and when you can get back to normal, right? And essentially see when your option prices are going to be normal again. So that is really one of the key things. So this is a low here after earnings, and so once you get above certain levels for particular stocks, right, you could tell that the premium starts to get really, really high. So anyway, that is today's discussion. I just wanted to go over the basics of volatility, and this week we're going to talk about some more strategies and ways that we can use that to our advantage, and also tactics that we can use to help trade that this week. So hopefully you guys found that helpful. And at this point, if anybody has any questions or chart requests, please feel free to plug those into the chat window, and we'll get through as many as we can, and we'll try to wrap up as quickly, or not as quickly as possible, but as early as possible, so we can all get a good night's sleep and have an awesome trading day tomorrow and an awesome trading week this week. So good stuff. All right, so let's take a look and see what we got here. So Shirley sent a few in here over the via email. So let's pull up a couple of these. So Shirley, I hope you're doing great. And let's take a look here. So let me just pull the chat box over there. Okay, good. And let's take a look. So ESTC. So this is a good one. I've had a few of our members have been asking about this one recently. Of course, we had earnings too. But one of the things to look at here, of course, is your upper shadow that we had after earnings, right? And that came right basically to this gap, and I believe filled the gap. Let's see, the low here was 77.40. The high here was 77.20. I didn't quite fill the gap, but it got really close, but it obviously found some resistance there at the gap. So that being said, it came back down, and we had an inside day to finish on Friday, which gave you actually a pretty big inside day, and we have an upper shadow right now. So this is definitely one to look at to the bullish side, but I do want to see it close into this gap right here, try to get over the 2-day moving average so it can work its way up. And Box. Okay, so Box had a big day. So it had a huge day on Friday. It had earnings, and then I think it had, I can't remember what the exact news was. Didn't it have some buyout type stuff? Let's see, revenue. That was the 26th, 27th. Anyway, I believe it had some just remarkable activity on Friday. Either way, it closed nicely above the 2-day moving average. Left you an upper shadow right here. It's got some crazy levels it's got to deal with. Let's pull up our trend line here. It's got some, looks like, let's see, the low here was 1476, the low here was 1478. So here's your low, here's your trend line. So we did close nicely over these levels right here, so that's good, but we still left it upper shadow. So look to see how it behaves over Friday's highs and see if we can get out of the cloud and try to work its way up and test some of the other levels above. And then you have ALKS. Okay, Okerbies. Nice pop, nice candle on Friday. It didn't have the increasing volume I'd like to see, but it's still, generally pretty bullish right here. So it's now back above the upward trend line. Again, I want to see a close over this guy at least, right, to start to get interesting with some more volume. And that is 2101. And then of course you have this these prior levels right here, which I'd like to see it get above too. So it's got a little bit of work to do, but it could be working on a bit of a cup and handle type pattern, or at least a decent cup right here to try to get you a breakout. And then JD, I know you mentioned that was on your short radar, but let's take a look at it and see how it looks. So it did have a pretty decent day. It does have earnings coming up tomorrow morning. So JD is coming up tomorrow morning. So just keep an eye on that, Shirley. So you do have this trend line right here. Let's see if we break above it. Let's see if they can do some good earnings. Again, I'm not sure how much JD, is a Chinese company. I believe it's a internet company. So let's see what they have in store, right? So maybe the COVID-19 hasn't affected them too much. Let's see if we can get over this pivot right here, and maybe give you a gap and go after earnings. So that could be an interesting one too. So good stuff. Great stuff, Shirley. Thank you. Dimitri, Apple. Yeah, let's take a look at Apple. So Apple had an amazing move yesterday, or on Friday. You can see its volatility is pretty high. So Apple Premium has actually been really expensive too. Apple is normally a pretty reasonable one to trade. Good, usually good liquidity, but it's been very, very expensive too because of the implied volatility, right? So we did hit an oversold level here on the RSI right at this macro trend line, which started all the way back from June 2019, right? Tagged here and then kind of worked its way up. So a nice little bounce off of that, actually a big bounce off of that. And now let's see if this candle can get some follow through the upside over Friday's highs. Could give a move up to that cloud level at 288. So let's see if I can get some bullishness for you. GoPat, what's going on? Tesla, yeah, let's take a look at Tesla. So Tesla's been pretty interesting. So no doubt, it's always been interesting. Now, Tesla's one that usually has had a pretty high implied volatility ever since this epic run. So one of the interesting things about Tesla is sometimes you can see that volatility go up even when it's bullish. So this is a great example of what we were talking about earlier. So this huge bullish candle right here actually increased the volatility of it because of how big the range was, right? It was a 112-point range on Tesla, which was typically its ATR was somewhere between 10 to 20 intraday. This day here was 30. Back here you're talking about 10-point range, 11-point range, stuff like that. So 100-something point range today starts to get that volatility going, right? Because of the amount of distance, right? The amount of the range that it can go. And then of course we had this big spike up here, another 135-point range, and volatility was at its peak. And I remember this day just looking at the options. I mean, they were just all over the place. Very, very risky stuff, right? We'll talk more about that as we go into this week. So right now, Tesla, pretty interesting. So because of the kind of this crazy cluster that we have going on up here, it makes it tough to put a real trend line on because the peak was right here. So you can draw your geometric trend lines. We had put a channel on that, but we also were like, okay, let's see what other kind of levels it could test. So we put a fib fan line here from this recent gap to the recent high, and that gave you some really nice Fibonacci fan lines right here. And it turns out that we had some confluence of this fib fan line and the 50-day moving average, and we got a bounce off of that on Friday to fill the gap. So now this could also form a Morningstar reversal here if we get bullish on Monday, tomorrow, and then see if we can get a Morningstar reversal off of that and then work towards the gap above. So that could be pretty neat. If not, we have a gap below that may still get filled. Okay, Matthew, what's going on? Thanks for tuning in, man. ZEK Investments, good evening. Triple M, absolutely. So this is an interesting one, right? So this one has been what we thought was going to be the go-to stock for masks for the coronavirus, and it turns out that it has had continual red days, even when it got an upgrade. So even the analysts were like, "Hey, this triple M could be a good one because they're masks," and it got an upgrade here, and even gave a pretty decent push to the upside, and then came back down again with an upper shadow here below the ADMA, and then Friday same thing, right? So there was a big rally on Friday, and a lot of the markets finished green, and 3M still finished red. So despite the potential for a nice move with Triple M, it still has not gotten any bullish setups, right? So we did have an inside day up, but again, a lot of that was part of the upgrade. So really, at this point, we have a breakout over this downward trend line right now. Let's see if we can close bullishly above it with some increased volume and work our way up. So one of the interesting things, though, even though it's a go-to for masks, one of the things that, what was it, the Surgeon General says, like, hey, folks, stop buying masks. But it doesn't mean that they still won't get that government sponsorship to make more for healthcare workers, et cetera, and, I guess general public as well, too. And so it's still something to keep an eye on. So it should be interesting. But again, I want to see it over Friday's highs. I want to see it close over Friday's highs, too, for it to start to get. If it does, it might be a decent swing. There's a gap up here, and it could be pretty interesting. I wonder if, because of all this new production, if maybe they'll hire back the 2,000 people that they laid off a couple earnings seasons ago. That would be interesting. So JD, we just talked about a little bit. So JD has earnings coming up tomorrow morning, so it should be really interesting. Let's see if we gap above this pivot level up here for a gap and go. If they have weak earnings, again, we'll see how far down it would go. This is definitely a very playable one after earnings, right? JD has great spreads and could give a possibility for a decent move. So definitely one to keep an eye on there. And in fact, let me make sure I get this here on my game plan for tomorrow for the there we go, for the 15 orb. So we'll keep an eye on the 15 orb on that one tomorrow for sure. Okay, good stuff. And what else? Regeneron. Yeah, so Regeneron's been an interesting one, guys. Regeneron is one just I don't trade, right? Because the options itself are just like so spready, right? You get like one, sometimes 2 point spreads in the option. It makes it really, really difficult unless you just go all in on it and let it work. Now, if you do let it work, this thing can move, right? You have the range right here is of this candle is 39 points. This candle here is 39 points. This candle here is 26 points. So it can move when it wants to move. I like how it finished green on Friday. A lot of stocks did finish green, but I like how it held the ADMA pretty well, and it's working on trying to take more of a piece out of this candle. So definitely want to keep an eye on there. So good stuff. Akshay, what's going on? Long time no see. Hope you're doing great. Let's talk about UNH. How did I know you were going to ask about that one? So UNH, pretty interesting. It had that epic run up since the last time we talked about it, right? Since these earnings here, we got that. Remember we talked about swinging that inside day. It came back down, tagged that inside day intraday, went from 20 cents to like $2 on the options, right? The 200-day moving average got back above 200-day, came back, retested it, and then just followed that ADMA up all the way on the daily chart. And then we just recently broke down kind of with everything else. But this one was relatively projected right here. Remember we had that Jack in the Box setup right here. Gap to the downside and a really, really nice move down. So it tagged the 200-day moving average, and now it's just below it. So now let's see if we can get above it and close above these levels and try to test some of these other levels, maybe work its way back to the cloud. So that could be a good one there. What else? Hey, what's going on, Prayer Kid? What's happening? Hope you're doing well. Michael, what's going on? Hey. Yep, so let's take a look. So we've got our zombie ETF right here. So Zoom has definitely been an interesting one. Bearish engulfing candle on Friday. Big lower shadow though too. It would have been nice to have seen it close towards the lows to look for some bearishness in it. But wow, they really held it too. This has been a go-to for the coronavirus. Why? Well, lots of companies are really doing less face-to-face meetings. I have friends overseas who are talking about their companies forbade them from going to visit clients. So everything's going to be done through telecommuting. And what better tool to use than a great telecommuting software like Zoom Video, who's doing all sorts of cool stuff for conferencing and everything like that. So and it's been a profitable company too, so they've been delivering on earnings. So they do have earnings coming up here, so now let's see if they can meet or exceed those expectations. So we have earnings this week on Zoom, which should be interesting, and that's on the 4th after, so it was that would be Wednesday after the close. So definitely something to keep an eye on there. Now, to say it's going to have an earnings run is tough to say, but it sure had a run here, but it's given some big moves at the open. Now, the volatility has spiked a lot on Zoom, and so when traditionally a decent move on like right here, right, was very, very tradable with reasonable spreads. Now we're getting some crazy moves right here, and why would the volatility be so high? Look at that, down day and a 24-point move for this stock. So you can see its implied volatility is over 1, so a very, very high IV on it, which makes the option premiums high, and quick moves on it can really get you moved out of it. So definitely want to keep an eye on there. Big lower shadow on that one. Square's another one. Had earnings the other day. Great move after earnings. It gave a nice spike and then pulled back, and then we have on Friday actually gave a really, really strong move. So a nice relative strength in Square here. Again, really the key things you can look at for some day trades potential, but I do want to see it get over that this recent high right here, the 87.25. So you can close over that with some new volume, then see if it can build from there. So right now, just we'll see if it stays in the chop zone or not. Soxl, let's take a look. SOXL. Okay, looking interesting right here. So we have our downward trend line. Very, very tight. Again, a push over Friday's highs could give it a move. So nice move off that one. Close over the 200-day moving average. And great volume on Friday. So that's a nice one there. And then your favorite, iBio. iBio has been pretty impressive, guys. These are the ones we were talking about last week. We were talking about when big money moves. You can't hide from this volume right here. 200, how many was it? 197, 200 million shares traded. Next day, huge gap up, and 260 million shares traded. So it went all the way from that day, 85 cents, all the way to $3.40. This one does not have options on it, but it sure is about priced like an option. So you can have a little fun with that one. Now let's see, huge upper shadow right here, so it's got some work to do, but this is another go-to one. And then RTTR. Yep. So RTTR, another potential there. Ritter Pharmaceuticals. So again, decent day on Thursday. Upper shadow, so that was a little bit risky, but you got that nice gap up right there, and still closed over the 2-day moving average. So that could be an interesting one to keep an eye on as well. Went from closed 27 cents all the way up to 60 cents. So nice stuff on that one. And Michael, yeah, BTI. Let's take a look. Yep, great candle. BioXcel Therapeutics. So this one got a very, very nice close of these levels right here. I would have liked to have seen a little more volume, but a beautiful candle, nice Marabozu candle on Friday. And yeah, so it could be interesting. Look for that one for a push above Friday's high too. That could be a good one. Tracy, good evening. Thanks for tuning in. AYX. There's a fun one to trade. And also nice candle on Friday too, and almost closed above this guy right here. But good volume, so let's see if we can push above it, and then we might get to the scene of the breakdown up here at 146 level. So that's definitely a good one to keep an eye on there. And then CRWD. I know you keep asking about this one, but it is still in the mess, right? But again, over these guys is going to be important here, but it was a beautiful candle on Friday that closed over the cloud. Look at that. Look at that resistance level back here. We're running right into it, so just be careful with that. So, but yeah, these are fun ones to trade when they run. AMVids, what's going on? Twitter. Yeah, nice move on Twitter. So this should be an interesting one. In fact, let's add this one to the 15 orb list for tomorrow too, because it sounds like there's an activist investor who wants to get rid of Jack Dorsey, their CEO, founder guy. And so that could be a big deal for Twitter if they could find somebody who actually cares about the profitability of the company. That could really get this thing going. And they may even, who knows, maybe even one day, it's definitely priced right, may even seek a sale, right? So I'm sure there's probably companies that are interested in it, like Microsoft, who knows, maybe Google, companies like that might be interested in Twitter. So very, very good. Maybe Facebook. So we'll take a look. Anyway, we'll have to see what they decide to do. Either way, it should be on the 15 orb list. Could be a little bit volatile. Look at that volatility, just like that on that down move on the Jack Dorsey news. So that could be interesting too. EVBG. Everbridge. Okay, so Everbridge, yep, holding up nicely. Look at that triple inside day. Try to work its way up. 109 is a key level for it to get above. See if we can do that. But it's been holding up green nicely here, even through the big down moves. So that could be good. Yeah, this right here. Just be careful. It is under this micro upper trend line right here. Again, I want to see it get above that. And if it gets above that, you're basically at, you shift your trend line over and you're above the all-time highs. And with some good volume up there, it could be very, very interesting. So definitely a good one to keep an eye at. Cloud Guy, what's going on? Good to see you. Thanks for tuning in. Manu, what's up? Yeah, let's take a look at Shop. All right, yeah, so Shop had some great strength. So just like Apple that held its macro trend line, Shop held its macro trend line from the November lows, which hit this level here. We tagged that and bounced off of it on Friday, as well as the cloud, and we closed above the scene of the breakdown right there. So that was nice. So let's see if it had some pretty decent volume, not increasing volume, but let's see if we can keep going, see if we can get over the 8-day. You got an open gap up here off of this inside day, so see if we can get there, and then we need to get over these levels, and then we got the all-time highs to deal with. So it's got a little bit of work to do, but it definitely had a strong close on Friday. Good stuff. And what else? VXX. Yep, let's take a look. The VIX. So this isn't the VIX itself, right? But it is a nice alternative to trade with it, right? So the options are good on this one. So it had a nice pullback, right, on Friday. So let's see if that gets any follow through to the downside. But it is still recently trending back up. So let's see if it holds. Let's see if it holds the trend line right here. See if it holds 200-day moving average. Could be interesting. But again, these VIX products are designed to go down, right? So when you can get a big spike like this and can try to short it, right? This was actually a good opportunity at the highs on Friday to enter into a short position to look for a possible move to the downside, because these do move down fast when they're ready to go down. So very, very good stuff there. Nice. Wendy, how's it going? Happy morning Monday. I hope you're doing well and everybody's healthy in Singapore. And let's take a look. So yeah, so SPCE. Well, SPCE, this is another example of stocks that go up and the implied volatility goes up, because this is a wild one, right? This is just big intraday moves, and almost for no reason, right? They had a big conference that came up, and they just had worse than expected earnings. They do have some orders coming in for possible future space flights, but basically at this point they're just kind of blah, right? So they had a big run up, and not surprised to see it move down after earnings, but it actually held up pretty well on Friday. So for whatever reason, this is a playground stock for a lot of traders. So keep an eye on it, see if it can push over Friday's highs. If it could, you might work on the gap on that one. And Roku is interesting. So Roku has been generally bearish for a while. Here's the macro downward trend line right here. I know it looks like a geometric line, but it actually is. This is the highest point since the recent lows. Now, one of the cool things about Roku is that it has held this prior resistance level right here, which had become support here, right? And we're back to these levels again here, right? So we have an inside day, and we had a decent close on Friday. So let's see if we can push it, get an inside day up, and work our way back out. 200-day moving average, 50-day moving average, and cloud. So we got those to look at. And then you have CLX. This is another interesting one. So this was a kind of a good concept like triple M for a Corona play, but it because it's disinfecting iron Clorox, right? They make bleach. It's a disinfecting company, and they make other disinfecting products. So it's definitely one to look at. But just like Zoom, right, it had a nasty day on Friday. So when they were pouring money into all the equities at the end of the day, they pulled it out, right? Sector rotation. They pulled it out of the zombie stocks, right? They pulled it out of the Corona plays. So we saw a big move back on Clorox, Zoom, things like that. Gold, right? Stuff like that all had a pullback, which was very, very interesting. So, and then Etsy. Let's take a look at Etsy. Yeah, so Etsy held up pretty well since earnings. Just watch out, it gave a little tweezer top with an inside day on Friday. So really, we do want to see it get over a couple of these pivot levels up here. It'd be nice to close over Friday's highs. We have these guys up here. So it's got some work to do, but it had a really, really nice move on a generally bearish day on Thursday. It stayed green with earnings. So that was definitely one to kind of keep an eye on that day. So great stuff, great charts. Dylan, NVIDIA and Avgo, Broadcom. So NVIDIA, let's take a look. Yeah, NVIDIA is another one like Shop. Great bullish day, right? So we looked at this as kind of just part of our examples that we had there, but nice relative strength on Friday, huge volume, big bounce off the cloud, and big bounce off this prior inside day high, which was also corresponding with a prior resistance level here. You see if you drag this out a little bit, right to the right, if I say that's right there, you can see that line right there was a prior resistance which served as support and then served as support again on Friday, and had some very, very bullish activity on Friday, especially into the close, but it had some nice stuff in the morning too. So good stuff there. So we'll see if that gets any follow through. Still below the 8-day, but close to getting above it. Then Avgo, Broadcom. So this one is, bullish candle again. Held some prior levels that we had, and then could be working on another Morningstar Reversal potential right here. So let's see how it closes on Monday and see if it can work its way up from there. Great stuff. Sean, what's going on? Thanks for tuning in. AMD. So AMD, I like, we'll talk more about techniques this week, but I do like AMD. It's kind of, NVIDIA had a big day and AMD had a nice day too on Friday. So let's see if, oh gosh, I have so many trend lines in here just from the intraday stuff. Give me a second there. Let's remove a couple of these guys. There. Okay. So yeah, nice candle here on Friday. It couldn't quite get above Thursday's highs, but if it could, we got a nice little gap up there. And then if we get above the cloud, right, we got this gap above here. So AMD is looking very interesting. Manu, yeah, you got a couple of more. Let's take a look. So AAOI. Applied Optoelectronics. So wow, so this one actually didn't finish strong on Friday, so we're still below the downward trend line right here. So it's got some work to do. You could look at a tighter downward trend line right here. So we do want to see it try to get above this. It'll probably get it tomorrow if it has any bullish activity. Then we want to see it close bullishly above that with some good volume, and then maybe try to get to this downward trend line here. But you gotta be careful with that. Some pretty big resistance, so you have to evaluate your risk reward pretty tightly. These are two tough ones, right? So these are ones that kind of provide LED type things like OLED, universal display, potential work with Apple and Samsung and things like that. So just kind of keep an eye on these right here. Good candle on Friday, still below the 80 MA. This is actually a Morningstar Reversal right here. You have your red candle right here, a real candle below that, and we closed over 50% of the range. So watch this one for some potential move to the upside. Just keep in mind this one is a little bit tricky to trade and it can get choppy. So you see this bullish candle right here, sideways. Bullish candle right here, sideways. I usually stay away from these guys, but yeah, it does look like it could be setting up for something long term. And Mike, what's going on? IWM, yeah, let's take a look. No, we haven't looked at it yet. So IWM's been interesting and was very, very bearish on the way down. So it has a lot of work to do to get back up. So let's see if that can give us a Morningstar Reversal tomorrow. But yeah, big upper shadows. This is propped on our bearish radar a lot to the downside. It's kind of led, been a leading indicator on the way down. So it's definitely one to keep an eye on there. So let's see how it does. See if we can go over Friday's highs and give us a Morningstar Reversal candle. That would be great. So good stuff. Look at that IV on that one too. Woo, high. So good stuff. Well, that was a great discussion today on volatility and defining everything. So hopefully you guys found that helpful. The rest of this week, we're going to talk about more volatility strategies and ideas. So I hope you guys are finding it helpful. If you're new here, definitely click subscribe on YouTube. And whether you're new here or not, definitely click the like button. We always like that. And also check out the links in the description. And I hope everybody has a wonderful night tonight and gets a good night rest and stays healthy so we can have a great trading week this week. And I hope everybody enjoys your evening. So thank you again, everybody, for tuning in. And remember your risk first and stay safe so you can stay in the game. And I'll talk to you guys soon.